possibility of a recession in the United States. It has been talked about. Oh, last year it was, oh, it's not going to be a 2022. There's going to be 2023. First half 2023. No, second half 23. Now they're saying maybe 24. No, maybe last half of 24. What do you think?
Well, being a yield curve devotee, if you looked at the yield curve having started its inversion in November of last year, the first month by that math would have been May that we could have entered recession. It could be as late as 15 months later, going back on that data since 1968. So the economy's softening to an extent in certain parts, but it's, and I've said this before, I don't think you can make any really uniform statements about the state of the economy because there are different silos operating at different speeds in ways that we really haven't seen in quite a while.
So, Jack, let me ask you this. Can you get inflation down to where the Fed wants inflation to be without crushing housing inflation, rents and house prices? And if you do that, don't you almost by definition have to put a lot of people out of work and cause a recession?
Yeah, and there's new study that says not necessarily. There's a Fed study now that says the linkage between wage growth and inflation is not quite as tight as we originally thought. So we may not have to kill the jobs market, for example, in order to quell inflation. I like the trend that's inflation. Look at the relationship between CPI and PPI, and CPI is following right along. Where's PPI year over year? 2.8.
You know, it's interesting about that. Roger Ferguson wrote an interesting piece that was on LinkedIn, the former Fed vice chairman, talking about
You interviewed him yesterday.
Relatively arbitrary 2% inflation target for the Fed. When you go back to 1960, the average inflation rate annually over that period through 2022 was 3.8%. So whether we should be at 3, whether we should be at 2, whether you could risk 1 if you drive the economy into recession, I think is an open question. But going back to 2 is just okay. You know,
we should mention that it took them a very long time even to get, I think there's a economist on Twitter who always talks about this, but it took till 1995 till we got, to target after the inflation that we saw in the 70s and 80s. So I don't think we should expect, and Jack, maybe you can react to this. Does the Fed itself expect to get anywhere close to that target before they know that they can stop hiking?
I don't know if they can get to 2%, but I think that just all other things being equal, if the Fed were to just pause right here, I think we can get easily into the 3s by year end. And, like Ron said, as we were modeling portfolio inflation growth back before the financial crisis, we routinely used 3%. So I'm not suggesting necessarily the Fed needs to, back down and get off that 2% target yet. But I think that we're navigating our way back there pretty well on our own, and I think we can do it without killing the jobs market.
Why are equities doing what they're doing, Ron?
A couple of reasons. Number one, the soft landing scenario seems to be playing out reasonably well. Earnings estimates are going up now rather than down. Inflation, as Jack just pointed out, is coming down, and in many ways coming down pretty aggressively. When you look at 6-month annualized rates of inflation, when you look at inflation break-evens, they're all moving back towards 2%. So the markets believe that inflation is now becoming self-correcting. And I think in future months, Steve Leeson brought this up, as some of the stronger numbers roll off from last year and that base effect disappears, inflation is going to moderate. And then you have the AI boom that's going on right now that's driving, obviously, a handful of stocks significantly higher. The NASDAQ 100's up 38% year to date.
It's great.
I mean, that's close to the pace that we saw in 1999 for the NASDAQ itself when it went up 85%, at the height of the internet bubble. I'm not saying this is a bubble. We talked about this last week. But certainly, we're starting to discount different things than a horrific recession, inflation that can't be beaten. And Michelle was right. China's exporting deflation right now, and that's probably a big help in a certain sense.